In this stock analysis video, I will share with you my simple investing process which has helped me get a consistent return of over 20%. First, let's find out about the company. Adobe was founded in 1982 and was later IPO'd in 1996. It operates through three segments: digital media, digital experience, publishing and advertising. Its flagship product is Creative Cloud, which is a subscription service that allows members to access its creative products. During our stock analysis, we're going to explore the key pillars, examine the ownership, look back at past results, we'll find out what the analyst predictions are, as well as giving the business a valuation, and examine the potential return on our investment, and finally we will summarise our findings. Let's start by looking at the key pillars for the trailing 12 months. In the book Rule 1 by Phil Town, he suggests that these are the key metrics when first evaluating a business. The first pillar we are going to explore is the earnings per share. This is where we take the net income and divide it by the shares outstanding. The higher the number, the more profitable the company. Earnings per share for the trailing 12 months is up 17%. Now let's look at the free cash flow, which is the money a business can generate from its operations. Free cash flow is down by 4%. Then we come to the next pillar, which is revenue, and this tells us how good the company is at generating income before deducting expenses. Revenue is increased by 13%. Book value is calculated by subtracting the total liabilities from the total assets, and this indicates the equity growth for the company. Book value is 21%. Now we want to turn our attention to the management of the business by looking at the return on invested capital and the return on equity. These two measures allow us to assess a company's efficiency at allocating capital under its control. Return on invested capital and return on equity are really great at 26% and 33%. Now we move on to debt, and Phil Town prefers a company that is able to pay off debt with their free cash flow within 3 years. Using their free cash flow, they can pay off the debt within 1 year. In this next section, we will now focus on other key metrics which will help define an excellent business. Now let's look at the gross margin, which is the amount of money a company retains after incurring the direct costs associated with producing the goods it sells and the services it provides. Adobe have an excellent gross margin at 88%. Next we come to the operating profit margin. This tells us how much profit a company makes on $1 of sales after paying for costs of production, such as wages and raw materials, but before paying any interest or tax. Their operating profit margin is brilliant as well at 34%. For Terry Smith, free cash flow yield provides a more realistic view of a business's financial health and profitability. He typically looks for a company that has a free cash flow yield of 5% or higher. They have a really solid free cash flow yield of 3.4%. As we are potential shareholders, we will now want to look at the average book value growth for the last 10 years. Their book value growth on average is 14%, with the lowest point being in 2022. Ben Miller believes earnings growth is the biggest indicator to a company's stock price, and this is 27%. I've included a link if you want to check out the investors page and see the annual report. This is Bitesize Investments, giving you a step-by-step approach to your investment journey. There are currently 8 super investors who own this company, and if we look back at David Tepper's previous sales and purchases, we can see he has both bought and sold shares in Adobe in the last few years, and has increased his stake in Q1 of 2024. He has 160 million invested in Adobe, and this makes up 2.29% of his overall portfolio. However, 8 other super investors have sold shares, and Pollen Capital has previously bought Adobe shares, but over the last year they've been selling. They have 1.26 billion invested in Adobe, and this makes up 3.08% of their overall portfolio. Now we look at the past historical prices of the company, as this will help us build a picture of periods of success or failure the business has been through. We can see that from 2014 till 2021, Adobe's share price was making some great year-on-year improvements, but in 2022, as the whole market dropped, Adobe dropped with them, and they fell to about $396 on average, but has now shown a recovery over the last few years. On average, the analysts believe that the price target should be $617, but some believe it can go as high as $730. Analyst reports suggest that Adobe is still undervalued at the moment, and the overall consensus is that Adobe is a buy. Collectively, the analysts believe the company will continue to grow between 12 and 25% over the next few years. So I'll use the earnings per share of 11.83 as my starting point when creating a valuation. Based on a combination of past growth and future analyst predictions, I'm going to estimate the earnings per share growth is at 16%. I'm going to give Adobe a PE of 38, and after that I'm going to project these numbers forward 10 years. This gives me an estimated future stock price of $1,982 per share for its future share price. Then we need to include a 15% return and work out the current value that Phil Town calls a sticker price, which is $490. And then we apply a margin of safety, and at 50% this gives us a buy price of $245, and at 25% it gives us a buy price of $368. As we can't rely on just one valuation model, I'm going to dig a little deeper and gather some more information. If you found this video useful, click on the link to check out my last stock analysis. Based on the book The Lunchtime Trader, I'm going to split the 5-year stock chart into 4 zones to determine the current movement of the company and to help identify key indicators such as when to buy and sell the stock. Our first zone is a market bottom for Adobe, which is about $280. Then we come to zone 2, which is between $385 and $466. We currently seem to be bordering on this zone and going into zone 3, which goes up to $573. And finally, zone 4 is anything over this price and is our potential exit strategy when the company becomes overvalued. But this depends on your current investing strategy. The return we would have received if we had bought at the 52-week low of $417 and sold at the market high of $638 would be 53%. We could see a return of 73% if we bought at our margin of safety price of $368. Adobe has a wide economic moat and some great products. Their high margins give them an excellent advantage over their competitors, but they do exist within a highly competitive market with companies such as Microsoft, Canva, Corel and Autodesk. They are currently holding a war chest of cash and therefore have a high free cash flow yield. If you've enjoyed the video, it would be greatly appreciated if you would like and subscribe to help the channel grow. And finally now we'll summarise what we found out about the company. When reviewing the key pillars, Adobe scored 10.5 out of 12, and under ownership 8 super investors have bought in the last few quarters and 8 have sold. Adobe's share price is currently in an upward trend, and analysts are indicating Adobe is a buy, and they are predicting they will grow between 12 and 25% in the next few years. Using the different valuation models, my personal buy price would be $368 or less, although it is very tempting at the moment. Adobe has a wide moat, and my final overall rating is 5 stars out of 6, and I have given this a category A rating within my own stock watch list. Thank you for joining me during this stock analysis video. As I'm a relatively new channel, please consider using the comment section to help me develop the content I am creating. And don't forget to like and subscribe.